All right, guys. Sorry about that. A little bit late on this one, but man, it's been a busy day. So, Fed announcement, no reaction at all. Same, they held the rate steady. A press conference. I had to say, I listened in on that press conference live, and I had to say that sounded pretty darn coy about the whole thing, you know. It's like, yeah. We're gonna look at the data and we're gonna look at we expect this and this and this and this. And Mark, you can see how the market started deteriorating and stuff. Started going sideways, like, yeah, we don't like what you're saying. We don't like what you're saying. And there you go. All the way down. They took out the 63.85s. They're down here at the 63.65s. Watch for them to take it down to the 50s. Looks to me like we're getting some lower highs here on the way down. So we're in a key spot of support here getting into the last 15 minutes of the day. Are we going to bust through it? Are we going to get a little snapback bargain hunt or something? But I don't think market liked at all what he was saying. And listening in on it, it's just, I had to say it didn't sound very impressive. It's like, yeah, we think this, our tariff it's all tariff expectations, you know, hesitation. We think it's going to cause inflation. We don't know how much, where, or anything else, but that's why we're not doing anything. So that was the message I got out of it. Market's not liking what they heard. They're definitely taking a leg lower. So in the bigger picture, we are right now pointed lower. We have taken out the key support area at the 85s, retracing right now, heading back to that 50 edge. So that's where we are. Let's see how bad it's going to get. No, it's hard to say. The next piece of news is going to drop is going to be earnings, big tech. I think it's Microsoft and Microsoft and oh, forgot the other one again. So yeah, I remember one, but not the other. But two big techs are reporting earnings after the close. We'll see how that goes. But at this point, we are right into that 65 support area. So starting off from the short side, unless we get a snapback in the last 10-15 minutes and run it up here to the mean, then I'll start range bound. But if they close above the 85s, we'll start range bound. If they can't close above 85s, we're starting with a bias to the downside. I've not tried to trade this. I was watching it. I was actually looking for a potential long trading when they were starting taking it lower. But since it's a Fed-driven sell-off, I just did not want to be aggressive about that buying opportunity. It never set up at the buying. You kind of had to step in front of it. And you don't want to do that when the market is moving based on news. It's just a recipe for a little bit of getting run over. Sometimes it works great. Sometimes it just keeps running as it did today. So we'll see. Looks right now hopeful. Let's see if the ES can show a little of strength. Last 10 minutes where you get the answer. So if we have 4 more minutes, then we'll get that little snap. Either it's going to be to the downside or they'll snap right back up again. We'll see. Looking at our Nasdaq and the bonds, bond market, not a big reaction on the bond market. That's a good sign. So the bond market not reacting in a big way is usually a good sign. Taking that with the strides. So it didn't spook those. They traded lower a little bit earlier on, but hasn't really done anything since. So a little bit of reaction, but not much. Nasdaq also took a leg lower. They were doing pretty darn good. They were up here. They were up here against the upper level. They popped pretty good. Looked to me like it's going to be positive for a second. And as the press conference kind of wear on, you see it's starting saying when they stop saying the market just kind of trickling down. So market not happy with it. I had to say that it's listening to it. It was not very like it's almost. No, I'm not going to go there. There's two Fed governors with dissented. So there's two dissents in the whole thing, which is pretty unusual. But they're still holding on to their rates, so we'll see how the whole thing shakes out. At this point, though, still looking at the Nasdaq. Nasdaq took out the 420s, probing lower. And if they can close above the 420, we'll start off range bound. If they can't, we'll start off with a bias to the downside and see how far they can take it. So that's kind of the dynamic going in. The key thing is, are they going to retrace, or in the last 10 minutes are we going to see them lean into it even harder? So we'll find out. Finally, oil and gold, and you can see here that's pretty interesting stuff. Oil traded higher, and real quick on touching on oil. A little bit of action back and forth. They traded higher up here to the 70-50. So I think they are in the move out of the middle to the upside now. Just had to call it the way we see it. So at this point, this move now is the move to the move out of the middle. They're heading higher, and we are starting to retrace this value. Feels counterintuitive still. So Not quite sure too much to make out of it, but at this point, still, they just trade it from the long side if you're going to trade it. If it starts trading below that 68.50 level, go back a range bound and trading back in that lower range again. But right now, I would stay on the long side on oil until we figure out what's going on with that. And gold, look at that sell-off. Big sell-off on gold as well. They took it down to the 33.40s and then some. So big moves to the downside on gold. If I show this whole picture for the day, you can see this is a pretty, that's gold for you today. Sell off, slop, sell off. And then the whole sell, they haven't done anything on the short side of it. It has been too volatile. So all these bars are pretty big and that I have not found a good opportunity. So I try not to trade it when it's like that. I just end up getting run over and it just sucks. So unless you have really, really good trade location and it works right away. But it's like you get run over a couple of times, you're down $100, $150 on gold. So it's it's something that's the unless I really get a really good opportunity, I just stay away from it. Selling the low, very difficult because you have a momentum, but what happens on gold, momentum down and then they stall and then retrace, back down, retrace. So it's and the retracement is big. So it's not like you had to click in an order, you have to have you stop way out there. So this bar right there is 45 up to the 52, so like 70, $80 stop to be on the right side of this. That's how bad it is. So I didn't trade gold, but they're down. So starting off on the short side on gold and see how far I can take it on the downside. In the bigger picture though, on gold, we rolled this one. This is the first day on the December contract. So rotation back to the mean is what we expected. I expected rotation back to the attractor at 33.40 if they took out support at 33.79 to 80, which they did. So that one was more of a technical thing. The sell-off right now, they closed the gap we have from the gap up. So we pretty much have a gap closure day on gold. So pretty interesting. But I would stay on the short side on gold. If they, I expect it to hold somewhere around here and trade back to that 33.40s. So that's kind of my expectation. So I'm not looking at gold. If you look at capital flow to keep going lower, they could go a little bit lower, but I'm thinking they're going to run into support and then trade back here to the 33.40s. That would be my expectation. Now back to the ES. And there we have it. Okay, so it looks like it's we are at 1250 now, 51. And I'm seeing NASDAQ trading back up again above the 420s. So I'm starting to get modestly optimistic that we may have a little bit of a snapback going on here. So look at the Nasdaq here. This is one which gives you a good sense. Look at that. They are back up here against this ledge. Watch that rotation at this 460 that comes out. I think we are good. But they're back up above that 420 support area. So if that holds, they can stay above it. We start off range bound. So that's where we are right now. And on the ES, we are right there where we are reverse retesting the 80s. So right here on the ES, reverse retesting the 63.85s. Let's see if they can get up above it. If they can get up above it, that rotation here at the 90s, I think they're good there too, but that's still out. The verdict is still out on that one. So we'll wrap it there. We'll see how it finally ends up in the last 8 minutes, but no trades on anything for me today. This last half hour, that's the part of the day could potentially have resulted in something, but no. So a no trade stay for myself. So, but we'll see you guys bright and early in the morning. We'll go at it again. So tomorrow morning, by the way, news before I wrap it up. News for tomorrow, Thursday, 8:30. We get jobless claims and inflation data. So we have a PCI coming out or a personal income coming out at 8:30. So 8:30, jobless claims and personal income, employment cost index. Then we have a Chicago PMI number come out, and that's about it. So interesting. So we got the inflation data coming out tomorrow at 8:30. That could be a market mover as well. All right, guys. See you in the morning. Later.